Hi traders, you are all welcome to another edition of Weekly Forex Forecast on FXless Trading School, which is for 19th to 23rd of April year 2021. In this week, I'm going to share with you some list of currency pairs I have on my watch list should in case of breakout of trade opportunities next week. If today is your first time viewing my YouTube channel, you are welcome. And then do not forget to subscribe to the channel as well hit on the notification bell, so whenever I release additional content of this kind, you're gonna be the first to be notified. Also remember, trading is a high risk and a high reward investment. Therefore, it's advisable you know what you are doing and then risk smartly. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the Euro paired against the USD. I have the USD paired against the Canadian dollars. I have the Australian dollar paired against the USD. And then we're going to wrap up our analysis with the XAU paired against the USD, all the good. So let's dive into the weekly Forex forecast right now. Welcome traders. And then for those of you guys who asked last week, why didn't I release the weekly Forex forecast? I didn't release the weekly Forex forecast because the previous weekly Forex forecast which I released was still active for last week. So that is why I didn't release the weekly Forex forecast. So whenever or anytime you figure out I didn't release a weekly Forex forecast in any week, it simply signifies the previous weekly Forex forecast is still active for that coming week. So that was the reason why I didn't release the weekly Forex forecast last week. The first currency pairs on our watch list is the British pound sterling paired against the USD. We can see the transformation of price in this narrow wedge on this currency pairs. And then I stated, for as long price travel within this range section right here, it does suggest this currency pair is not yet in a defined market. So next week, as a price action trader, we need to focus our attention to see how price is going to react this low high swing right here. If you should pay close attention to the formation we got at this double swing right here, we can see it's a double bottom formation, which does suggest a bullish technical implication. So next week, as a price action trader, focus your attention to see how price is going to react to the low high swing right here. If the bulls can pull up price and they clear off this low high swing right here, then it suggests the bulls are willing to proceed further to clear off the next low high swing we got right here. And if the bulls should successfully clear off this low swing high right here, then it suggests the bulls are willing to retest the last resistance structure which acts at the price level of the 1.42413. Alternatively, next week, if the bear should step in, maybe from this section right here, or maybe from the section of the low high swing right here, whereby they reject price downward, they still have to clear off this dynamic support right here, which had been rejecting price. You can see whenever price test this dynamic support, it always tend to serve as a dynamic support. So next week, the bears have to clear off this dynamic support before they can actually test the next dynamic support trend line right here, which is the dynamic support of this narrow rising wedge. So next week, as a price action trader, focus your attention to the dynamic trend line we got right here, likewise the low high swing right here, likewise the dynamic support trend line right here, and the bearish close below this dynamic support trend line right here, likewise right here, which suggests a more bearish downward rally to the next key level support, which acts at the price level of the 1.34916. The next currency pairs on our watch list is the Euro paired against the USD. We can see how price broke the dynamic support trend line we got right here with a decisive volume. This is the kind of volume I always called a bearish close, a well decisive volume. So what we can figure out right here at the price level of the 1.1958 is not a decisive volume. So if you're gonna take this kind of breakout, it's a very risky decision. So we can say we got a high swing right here, we got a low high swing right here. So next week, there's high tendency for this medium right here to turn into another low high swing for a more bearish downward rally. So next week, as a price action trader, focus your attention to see what price is gonna carve at this key level structure of the 1.19587. Maybe it's gonna be a bearish price action signal for continuation of the bearish rally, or maybe price is gonna carve a strong bullish buy signal bar for a more bullish rally on this currency pairs. The next currency pairs on our watch list is the USD paired against the Canadian dollars. We can see the bearish narrow wedge right here. And it is why I always emphasize, if you want to take a breakout of a key level structure or of a dynamic structure, always make sure it's a well decisive breakout. There is a volume. So right here we can see dwindle of prices right here. So right here is still a market without no volume. So we can see our price is retesting this dynamic trend line right here. So this dynamic trend line is still acting as a support dynamic trend line for price. So next week we still need to focus our attention on this currency pairs to see how price is going to react to the key level support, which acts at the price level of the 1.25101. Failure for this key level structure to act as support for price, if the bears can successfully ensure a strong bearish close back into this narrow wedge, it suggests this currency pair is still under the influence of the bears for a more bearish rally. Alternatively, next week, if we can figure out a strong bullish price action signal bar right here, the bulls still have to clear off this last low high swing we got right here before they can gain enough strength to anticipate for a more bullish upward rally to retest the next resistance structure, which acts at the price level of the 1.27771. So next week, as a price action trader, focus your attention to the key level support and the dynamic trend line we got right here. Likewise, the minor key level structure, which is a low high swing right here, which lies at the price of the 1.26327. The next currency pairs on our watch list is the Australian dollar paired against the USD. I discussed about the significance of this head and shoulder pattern we got right here, likewise the neckline right here. Technically, in the head and shoulder chart pattern formation, not until price close above the right shoulder right here before this pattern can be invalidated. So for as long price trade within this right shoulder right here, it suggests this pattern is still active, and then this pattern can still turn into what is being called a broadening shoulder. So this pattern can still turn into a broadening right shoulder. So and then not until if price can ensure a strong bullish close above the right shoulder right here before this pattern will be tagged as an invalidated pattern. So if you are buying this currency pairs, you have to be very, very careful of the next key level resistance, which acts at a price level of the 0.78209. I am not doing anything on this currency pairs. So next week, as a price action trader, focus your attention to this key level structure to see how price is gonna react. Maybe it's gonna carve a bearish price action signal for what? For another bearish downward trend, or maybe the bulls are gonna be successful to break out of this pattern for a more bullish rally. So this is what we got on this currency pairs. That is the Australian dollar paired against the USD. The head and shoulder pattern right here is still active, and if the bear should step in whereby they put price downward next week, they still have to clear off this key level support, which acts at the price level of the 0.75671 before they can speed for a more bearish downward rally. And then if that should occur whereby the bears clear off this structure right here, it suggests this currency pair is now in a bearish wave rally. It is time we wrap up analysis with the market of the gold. That is the XAU paired against the USD. We can see the market of the gold had been in a bearish downward rally, a very strong bearish rally, right from the 6th of August of year 2020, last year. And currently in this year right now, we can see our price carved a double bottom formation. This formation supports a bullish implication. And we can see how price broke out of the neckline of this double bottom formation. We can see the first swing low right here. We get another swing low right here, which is a double bottom pattern on the market of gold. So we can see our price carved a high low structure right here before price broke out. But this pattern right here, volume right there, was a my volume. So if you want to buy the market of gold, you are very, very, very careful, because it is a my volume right there. And the best zone to implement your stop loss if you want to buy the market of gold is at the last high low swing right here. There's high tendency for price to make a retest of this resistance of the channel we got right here. Alternatively, next week, if the bear should step in aggressively whereby they put price downward again, whereby they ensure a bearish close below the key level structure of the 1764.987, then suggests the market of gold is still in a ranging market. That means a market not yet in a defined no trend. This is what I want to share with you guys in this weekly Forex forecast. Thank you for watching this video from the beginning to the end, and do not forget to subscribe to the channel. Click on the notification bell as well. Like this video, share this video, put a comment down. Looking forward to seeing you in the next video. Have a wonderful weekend ahead. Peace.